Hello, friends, and welcome to my YouTube channel Simply Stocks. And today I'm going to talk about Apex Frozen, a very interesting company where I feel that the worst might be over. So let's understand about the business and what lies ahead. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Before I talk about Apex Frozen, here's a small request that kindly support me on Patreon, and once you do that, it will help me grow the channel, help you also ask me questions on a greater detail. Once you get the $10 membership, you'll have access to my portfolio, a watch list with a number of stocks, around 70 stocks in it, and also a number of podcasts that I put up every now and then. Every 2-3 days, I put a podcast on markets and stocks. For detailed company analysis or one-on-one discussion with me, you can directly email me and we can work things out. Now about the company, Apex Frozen Foods was commenced its businesses in 1995, and they deal in aquafeed and shrimp exports majorly to America and other parts of the globe as well, but majorly to United States. Produces white-legged and black tiger shrimps. Supplies to food companies and retail chains and restaurants there directly to them. If you look at the financials of the company, then the Q2 numbers of FY21 are out. So sales dropped by a mere 5%, which is a very big positive considering how the numbers in June were. And profit grew by around 13%, which is again a positive. There's high promoter holding at 72%, and less, you can say, institutional holding. Net profit margin has spiked to 9.5%. Operating profit margin has also remained robust, and the stock has declined from the highs and is stable around 280 to 85 levels, but it has gone down appreciably from the highs of 2017. If you look at the performance, so it had a stellar debut. So the stock is down 70% from the peak of 2017 in that bull market. When we saw that mid and small cap bull run, the stock went up appreciably, fell 70% in just 7 weeks during the Feb March fall. So even from the February, you can say, levels, it fell from February to March, it fell 70% from those levels. Has been a rank underperformer for many quarters. So it has been around, you can say, 8 to 9 quarters where the stock has not performed at all. And when such underperformance continue for a consumer type of a company, and the stock tries to stabilize, it looks viable, and it looks viable for a buy, a risky trade, and that's what I'm looking at the moment. Numbers have remained subdued for past few quarters, but the September quarters has been good. So Q2 has seen green shoots and good recovery, and that what give me confidence. But we need to look at how the December quarter works out. Probably one more quarter, but things are looking up, and the stock hasn't reacted that well to those numbers. So that is where one can see value in the stock at the moment. So issues surrounding the stock at the moment. Global economy is under stress. Now this has been happening since FY18. So from the second half of 2017 calendar year, economy globally as well as here in India has been on a declining trend, and the performance has not been that great, and the current pandemic has only accentuated the current situation. Plus, there is a US import tax increase that took place a couple of years back in later half of 2018. That also stuck big on Apex and another company that is listed in this space, and we all know about it. Results have not been that good. So what has happened is that the stock has run up a lot. So the stock did extremely well upon listing, but the numbers have not followed, and that has been the disappointment, and that's why the stock has fallen appreciably from the highs of 2017. And you can understand that current global health situation has totally worsened the matter. So what has happened is that most investors believe that you can say movement of goods, movement of food products could be hampered appreciably going forward, even for a year or so, and things might not look that good. But the numbers uh, currently for the September quarter tells a different story, and things are improving. That's what we are seeing. In 2017, whatever the valuations were, they were extremely stretched. The stock was trading at nearly 100 times, 80 to 100 times. Now that is not the case. Currently the stock is trading at 12, 13 times earnings, and that also gives a lot of comfort at the moment at current prices. So domestic economy was under turmoil since 2015, so not even 2017-18, but since 2015, domestic economy has been under a lot of stress. And what that has done is that Apex, you can say, sales here in India has also shrunk appreciably. So overall, the business has gone down tremendously over the last 3 years, and I think business is turning around. That's my belief. We can take that punt. Probably another quarter we have to look, and we'll find out in essence as to how the company is doing. So it may be a risky buy. Why I believe that is valuations at the moment is very attractive. So maybe it will fall another 15% from here if the market reverses. So do not go ahead and buy everything today, but have a look at it. Just have a look at the December numbers, which will come out in February, and probably accumulate a little bit here, because current valuations is not that stretched. At 280, it is not trading at 800 or 900 rupees, or something like that. People are very bearish on the stock, and I'm a big contrarian player always in the stock market. So very bearish on the globe, and global movement of food products and everything. And probably investors believe that it's going to take a lot of time. Hotel industry, restaurants will going to take a lot of time, so the business may not come back. I think the market will price that in early. So if things are going to normalize by June, July next year, I think market may price that in by January, February. So we might be having 2, 3 months more to accumulate such stocks. That's my assessment. You can take your own call, and the disclaimers apply, but at the moment the stock looks attractive. Things can only improve from here. So what we are seeing on the ground is that the numbers have been abysmally poor over the last 10, 12 quarters. I think you cannot go zero on such stocks or companies with businesses. I think the business will only improve as things are improving on the ground. And September numbers really does give me confidence, and it tells me that things may be getting back to normalcy. Yes, there are issues with slight debt on the company. There are issues with fluctuating numbers, volatility in the stock, etc. But the stock is at, you can say, the best part is that the stock is coming at a very much discount to what it was in 2017. Plus the US political change may also help. I don't know exactly, but it should. It looks like a softer stance from US would come in for import into United States from other countries, especially from India. So that has to be seen, but it looks a slight positive rather than a negative that the government has changed there. So what needs to be done? I would say that you can buy few now and on major declines to 240, 235. Those are good levels to get into. But result needs to be analyzed on in December and in March, and then only you can take a big bet. Once things really get going, you can even buy at 320, 330 levels. You can expect volatility on the stock. Have a long term view and put only 5% of your total holding. Do not put a lot immediately, but when the stock performs after you have put in the money, then you can add more to the stock. So this was my video on Apex Frozen. Please like and subscribe my channel, hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.